For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has been dominating, and there is a compelling reason behind the growing attention. As a powerhouse in big data analytics, the company plays a vital role in both government and commercial sectors. Its cutting-edge ability to deliver real-time data-driven insights has made it an indispensable partner for clients ranging from various branches of the United States government to some of the world's largest corporations. This unique positioning has enabled Palantir to carve out a strong presence in the rapidly expanding artificial intelligence and data analytics industries. So what exactly is fueling the growing interest in Palantir today? A key catalyst is the company's upcoming earnings report, set to be released on February 3rd, 2025. Investors and analysts alike are eagerly anticipating the financial results, as they could provide critical insights into the company's performance and future growth trajectory. Many are hopeful that Palantir will exceed expectations, further solidifying its standing as one of the most promising technology stocks in the market. Market analysts remain optimistic about Palantir's earnings potential, with expectations pointing toward a positive earnings surprise. This sentiment is driven by the company's ability to secure high-value contracts, broaden its market presence, and continue expanding its offerings in the artificial intelligence and data analytics space. The growing demand for advanced data solutions has played a significant role in fueling Palantir's revenue growth, particularly as industries worldwide recognize the importance of harnessing real-time insights to drive decision-making. Despite the bullish outlook from some investors, it has not been entirely smooth sailing for Palantir. While the company has demonstrated significant expansion and continued innovation, there are concerns among analysts regarding its valuation. Some experts believe that the stock's rapid ascent has led to an inflated valuation, which could pose a risk for investors moving forward. Recently, Morgan Stanley weighed in on Palantir's stock, issuing a downgrade from a neutral stance to a sell rating. The financial firm cited concerns over the company's high valuation. As part of its assessment, Morgan Stanley placed a price target of $60 on the stock, implying that it could experience a substantial pullback. Some forecasts even suggest that Palantir could see a potential decline of 40%, further fueling skepticism among cautious investors. Despite these concerns, Palantir's fundamentals remain strong. One of the key drivers of its success is its ability to consistently secure large-scale government and commercial contracts. Recently, Palantir secured a notable agreement with the United States government aimed at strengthening artificial intelligence capabilities within military operations. This contract underscores the company's growing influence in the defense sector, as its technology plays a crucial role in modern warfare strategies, intelligence gathering, and national security initiatives. Beyond government contracts, Palantir is also making significant strides in the commercial sector. The company has been expanding its reach by forming partnerships with major enterprises looking to integrate advanced data analytics into their operations. Industries such as healthcare, finance, and manufacturing have increasingly turned to Palantir's technology to optimize processes, enhance decision-making, and drive efficiency. This broadening market presence reinforces Palantir's long-term growth potential and suggests that its impact extends far beyond government applications. Looking ahead to Palantir's upcoming earnings release, investors will be closely monitoring key performance indicators, particularly revenue growth and earnings per share. The optimal outcome for the company would be a strong beat on both fronts, which would help validate its ongoing growth strategy and address concerns surrounding its valuation. If Palantir manages to deliver robust earnings results, it could reignite bullish momentum and reinforce investor confidence in the stock's future prospects. However, if the company fails to meet expectations, it could trigger a wave of selling pressure, particularly from investors who are already wary of its high valuation. Given the current mixed sentiment surrounding the stock, Palantir's earnings report will be a crucial event that could dictate the stock's direction in the coming months. On Wall Street, Palantir is currently rated as a hold, reflecting the cautious yet balanced stance that analysts have taken on the stock. The average price target sits at $51.50, suggesting a potential downside of approximately 35.43% from current levels. While some investors remain optimistic about the company's long-term prospects, others are taking a more measured approach, considering the risks associated with its valuation. Palantir remains a significant force in the data analytics industry, with strong fundamentals and a rapidly expanding market presence in both government and commercial sectors. The company's ability to secure high-value contracts and drive innovation has positioned it as a key player in the artificial intelligence revolution. However, concerns about its valuation continue to weigh on investor sentiment, and its upcoming earnings report will serve as a pivotal moment in determining the stock's next move. Investors should keep a close eye on Palantir's financial results, as they could provide valuable insights into the company's trajectory and future growth opportunities. Whether the stock continues to climb or faces a correction will largely depend on how well Palantir delivers on its earnings expectations, and whether it can sustain its rapid expansion. You should also know that Palantir has emerged as one of the most sought-after artificial intelligence stocks in the market, experiencing a phenomenal rise of 362% since the start of 2024. Despite this extraordinary growth, analysts on Wall Street remain skeptical about its valuation. Many believe the stock is significantly overpriced relative to its fundamentals. According to Yahoo Finance, the consensus price target set by 22 analysts is approximately $46.01. Given that the stock is currently trading around $75, this implies a potential downside of 40%, which raises concerns for investors who are considering the long-term viability of holding the stock at such elevated levels. Investors are naturally wary of the possibility of their holdings losing a substantial portion of their value. Understanding the reasoning behind Wall Street's projections is critical in assessing whether Palantir's current valuation is sustainable. It is relatively rare for a stock to trade at such a substantial premium compared to analysts' average price targets, which signals that the market may be overly optimistic about its future growth. One of the key reasons Palantir has gained significant attention in the artificial intelligence sector is its long-standing presence in the industry. Unlike many artificial intelligence-focused companies that have emerged in recent years, Palantir has been leveraging artificial intelligence-driven solutions for over 2 decades. The company initially provided artificial intelligence-powered software solutions exclusively to government agencies, helping them enhance decision-making processes with advanced data analytics. Over time, the company expanded its reach, introducing its artificial intelligence solutions to commercial enterprises. This expansion significantly broadened its total addressable market, giving the company access to a much larger pool of potential customers. However, despite the growth in commercial contracts, government contracts continue to account for the majority of Palantir's revenue. In quarter 3, the company reported $408 million in revenue from government clients, while its commercial business generated $317 million. This revenue split highlights the company's deep-rooted ties to government contracts, which have historically been a stable source of income. Palantir's financial performance has been strong, with its revenue growing by 30% in quarter 3. Additionally, the company has achieved full profitability, recording a healthy profit margin of 20% during the same period. While these figures demonstrate the company's solid financial position, the key concern among analysts is not its growth potential or business opportunity, but rather the lofty expectations already reflected in its stock price. Palantir's current valuation is difficult to justify given its existing growth rate. The stock trades at an astonishing 397 times trailing earnings and 138 times forward earnings, making it one of the most expensive stocks in the market. Such high valuation multiples suggest that investors are pricing in substantial future growth, which may be difficult to achieve at the current pace. However, even when considering its price-to-sales ratio, which currently stands at 72, the stock remains incredibly expensive when compared to other software companies that have yet to achieve profitability. Many high-growth software firms trade at price-to-sales ratios ranging from 20 to 30 times sales, but the current revenue expansion does not support such a high multiple. To further analyze whether Palantir's valuation is warranted, it is essential to evaluate its potential growth trajectory over a 5-year period. Assuming an optimistic scenario where the company maintains a revenue growth rate of 30% per year, expands its profit margin to 30%, and share dilution from stock-based compensation is ignored, Palantir's revenue would reach $9,820 million in 5 years, with net profits of $2,950 million. While these figures represent a substantial improvement from its current revenue of $2,640 million and profits of $477 million, they still do not justify the stock's current valuation. Even after 5 years of sustained growth under this highly favorable scenario, Palantir's trailing price-to-earnings ratio would still be 61. This means that even if the company achieves all of these optimistic growth projections, its stock price would still be expensive relative to its earnings. Moreover, 2 of the 3 assumptions in this scenario are highly optimistic. Analysts on Wall Street currently forecast that Palantir's revenue will grow at a rate of 25% in 2025, which is notably lower than the 30% growth rate assumed in this scenario. Additionally, the company has a history of significant shareholder dilution, with its share count increasing by 3% year over year due to stock-based compensation. While it is possible that Palantir reaches a 30% profit margin in the future, that alone may not be enough to justify its current valuation. If the company's growth slows or if profitability targets are not met, the stock could face significant downward pressure. This is particularly important to consider given that artificial intelligence investing has been a major driver of the stock's recent surge. Once enthusiasm around artificial intelligence stocks begins to fade, Palantir's stock price could experience volatility, leading to potential declines. It remains uncertain whether Palantir's stock will decline by 40% in 2025, but given the current valuation, some level of correction would not be surprising. Investors should carefully weigh the risks and consider whether the company's current growth trajectory can support its stock price over the long term. While Palantir is undoubtedly a leader in artificial intelligence solutions, its premium valuation means that even small setbacks in growth or profitability could trigger a decline. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.